Hello Keystone investors, welcome to our video on decentralized finance. In this video, we'll give you a quick rundown of what DeFi is and talk about the transition from traditional finance to decentralized finance. Now, decentralized finance or DeFi is a fast-growing area within the blockchain and cryptocurrency, which uses blockchain technology to develop decentralized, open and transparent financial services like lending, borrowing, trading, and insurance. DeFi also removes the middleman, such as banks and financial institutions, by allowing direct peer-to-peer financial transactions. This new approach seeks to make financial services more accessible, efficient, and affordable to everyone. Now, the shift from traditional finance to DeFi is gaining traction as more people see the drawbacks and inefficiencies of the current financial system. Traditional financial services are often centralized, with a few major entities controlling the access to financial products and services. This centralization can result in higher fees, a lack of transparency, and limited access for those underbanked and unbanked areas. DeFi, in contrast, provides a more user-friendly option compared to traditional finance. By harnessing the blockchain technology, DeFi platforms offer open, clear, and unrestricted access to a variety of financial services. This allows people worldwide to access and participate in financial markets without intermediaries or gatekeepers. The shift towards DeFi is creating new opportunities for innovation, financial freedom, and global economic growth. So in the next couple of sections, we'll get into DeFi's core principles, examine the different components of the DeFi ecosystem, and discuss the benefits and risks associated with the new financial landscape. Decentralization and trustlessness are fundamental to DeFi. This system operates without a central authority, with decisions and transactions made by users interacting directly with smart contracts on the blockchain. This trustless system allows for a greater security and autonomy as it eliminates the need to rely on third parties such as banks or financial institutions to manage your funds or transactions. DeFi platforms and applications are typically open source, meaning that their code is publicly available for anyone to review or contribute to. This transparency fosters innovation and collaboration while ensuring that the system is secure and reliable. Additionally, DeFi is permissionless, meaning that anyone with internet can access and participate in the ecosystem without needing to request permission or meeting a specific requirement. This allows for a greater access to financial services and opportunities regardless of your location or socioeconomic status. Financial inclusion and global reach are also a core principle to DeFi. One of the primary goals of decentralized finance is to provide access to financial systems for those who have traditionally been excluded or underserved by existing financial systems. By operating on a global scale and leveraging the power of blockchain technology, DeFi can help bridge the gap between the unbanked and the financial services they need, fostering economic growth and financial stability for individuals and communities worldwide. Now let's dive deeper into each key component of the DeFi ecosystem, explaining them in more detail to provide a comprehensive understanding. Smart contracts serve as the backbone of the DeFi system. These are self-executing digital agreements that automatically perform specific tasks when certain conditions are met. For instance, if two people agree to a bet, a smart contract can hold all the funds and automatically distribute the winnings to the correct party when the outcome is determined. This eliminates the need for a trusted third party such as the bank or a lawyer to oversee the process, reducing costs and increasing efficiency. Now, stablecoins can also help bring stability to the DeFi ecosystem. Since cryptocurrencies can be quite volatile, stablecoins provide a way to hold and transact with digital assets that maintain a more stable value. By pegging their value to the traditional currencies or other stable assets, stablecoins make it possible for people to use digital money in a more predictable and reliable manner. This is especially important for those who rely on digital assets for everyday transactions. Decentralized exchanges empower users to trade digital assets directly with one another without relying on a central authority to facilitate the transactions. This not only helps reduce fees and waiting times, but also prevents issues like hacks and thefts that can plague centralized exchanges. Decentralized exchanges use smart contracts to automatically match buyers and sellers, ensuring that trades are executed securely and transparently. Lending and borrowing platforms in DeFi create an open marketplace for people to lend their digital assets to others or borrow assets from them. These platforms utilize smart contracts to manage the lending and the borrowing process, allowing for transparent interest rates, collateral management, and enforcement of loan terms. This provides users with a more efficient and accessible way to borrow money or earn interest on their assets without really relying on banks or traditional lenders. Yield farming and liquidity mining are also innovative ways for users to earn passive income in the DeFi ecosystem. By providing support to DeFi platforms such as lending digital assets or facilitating trades, users can receive rewards in the form of token or interest payments. These strategies can be complex and may involve a certain level of risk, but they've become popular methods for users to generate additional income from their digital assets. Now, lastly, tokenization and non-fungible tokens, or NFTs, offer new opportunities for people to invest and own a variety of different assets. Tokenization involves converting real-world assets like real estate or fine arts into digital tokens that can easily be bought, sold, or traded on the blockchain. This process makes it easier for people to invest in these assets, even if they don't have a large amount of money to spend. NFTs are unique digital items that cannot be exchanged on a one-to-one basis like traditional cryptocurrencies. Each NFT represents a distinct asset, such as a collectible card or a piece of digital art, and can be bought, sold, or traded on various online platforms. Now, the popularity of NFTs has grown rapidly, with some digital artworks and collectibles selling for millions of dollars. By exploring each component in greater detail, we can see how DeFi is creating a more inclusive, transparent, and accessible financial system. The combination of smart contracts, stablecoins, decentralized exchanges, lending platforms, yield farming, and tokenization allows people to manage their money and assets in a more decentralized and an efficient way. Now, DeFi offers several advantages that set it apart from traditional financial systems, but it's essential to be aware of the potential risks and challenges as well. Increased accessibility and financial freedom are significant benefits of DeFi. By allowing anyone with an internet connection and digital wallet to access financial services, DeFi removes the barrier typically imposed by traditional financial institutions. This can be particularly empowering for unbanked and underbanked population who have been excluded from traditional financial systems due to location, income, or credit history. Lower fees and faster transactions are also major advantages of DeFi. Since DeFi platforms eliminate intermediaries like banks and payment processors, transactions can be executed with reduced fees and in a shorter time frame. This makes it more cost-effective and efficient for users to manage their assets, send money, and access financial services. Now, greater transparency and control also comes with DeFi's nature. Since DeFi platforms are built on blockchain technology, all transactions are recorded on a public ledger, allowing users to verify and audit transactions independently. This allows users to maintain control over their assets, as they don't need to trust a third party with their funds and personal information. However, there are potential risks and challenges associated with DeFi as well. One of the main concerns is reliance on a complex and relatively new technology, such as smart contracts. If these contracts contain flaws or vulnerabilities, it could lead to loss of funds or other issues. Additionally, DeFi platforms may be subjected to hacks and security breaches, which can result in significant losses for users. Another challenge is the lack of regulation and oversight in the DeFi space. While this can lead to increased freedom and innovation, it also means that users have limited recourse in case of dispute or fraud. Regulatory authorities may also eventually impose stricter rules and regulations on DeFi platforms, which could impact their operation and user experience. Now, finally, it's essential to note that DeFi platforms and assets can be volatile and speculative in nature. Users should be prepared to navigate price fluctuations, market risk, and potential losses when engaging with DeFi platforms. By understanding the advantages and potential risks of DeFi, users can make informed decisions about whether and how to participate in this rapidly evolving sector of digital finance. And that leads us to the question of how to get started with DeFi. Getting started with DeFi requires a basic understanding of cryptocurrency wallets, knowing how to interact with DeFi platforms, and staying informed by conducting thorough research. It's crucial to understand cryptocurrency wallets. A wallet is a digital tool that allows you to store, manage, and interact with cryptocurrencies and DeFi platforms. Wallets come in various forms, including hardware wallets, software wallets, and browser-based wallets. Hardware wallets are physical devices that offer high security, while software wallets are applications installed on your computer or mobile device. Now, browser-based wallets are extensions that can be added to your web browser, offering easy access to DeFi platforms. When selecting a wallet, consider factors such as security, user-friendliness, and compatibility with your desired DeFi platforms. It's also essential to learn how to secure your wallet by creating a strong password, enabling two-factor authentication, and regularly backing up your wallet's private key or seed phrase. Next, you want to learn how to interact with DeFi platforms by connecting your crypto wallet to their website or application. This lets you access services like lending, borrowing, trading, or staking. Now, each platform is different, so get familiar with their functions and consider factors like reputation, security, fees, and supported assets. Now, staying informed and researching are also essential in DeFi. Dedicate time to learn about different projects, read the white paper, and follow industry news. You want to join webinars, podcasts, courses, and online communities to deepen your understanding and stay updated on developments, risks, and scams. By understanding wallets, learning how to interact with DeFi platforms, and staying informed, you'll be ready to explore the decentralized finance world. Approach it with patience and caution, and remember that the DeFi ecosystem is complex and evolving. Staying educated and updated will help you make the most out of DeFi opportunities. As we wrap up this video, we hope that you've gained valuable insights into the world of decentralized finance, its potential to transform financial landscapes, as well as how to begin your journey. Remember, this is just the beginning, and there's so much more to learn and explore in the world of DeFi. So stay curious, keep researching, and embrace the opportunity that lies ahead. And that's it for today's video. Thank you for joining us in this exploration of decentralized finance, and I'll see you guys in the next video.